Good afternoon, everyone. Hope you can hear me. It's been the 16th of March, would you believe, is the last time that we had an Academy Forum, and we all saw one another at Thorndon School. And who would have believed what has happened since then? Obviously, a week after that, all seeing one another, we had our fears confirmed and we went into lockdown. But we didn't, I don't think, believe that schools would close. But unfortunately, that was the case. And a lot has happened since then, and a lot will be focused on this forum today about things that come out of that. One of the things that we have learnt how to do, I hope, is the use of Teams. We never, as a firm, used Teams before this, but now we're getting used to it, although I'm sure there may be glitches along the way. One of the things I have learnt with the use of Teams is I've never realised how much I waved at people to say hello. That's very odd, and I'm doing it a lot more when obviously these things when we leave. Unfortunately, you won't be able to see me at the end because we're doing it with the slides in front of us, but I thought I'd just do a quick introduction with a face to the voice. David and Michaela will be presenting as well, and Alan Rolfe at the end, but once again you won't actually see them, unfortunately. We hope that the next forum that we do in December, we'll be able to get together once again, because we know that some of the value that you get out of these forums is meeting one another and sharing experiences with one another. So we hope this all goes well without an IT glitch. What you'll see, we've sent you an agenda for today. Vicky kindly has done all the hard work of preparing us for this. She sent you an agenda and also some handouts, a couple of handouts to do the Academy's accounts direction and the Academy's financial handbook. So you got those there. You should see in the top right hand corner, I'm assured that there's a question and answer panel for you to send us your questions. Unfortunately, probably what we prefer to do is that if you could send those in, and then we'll look at them at the end. Vicky will collate them all. We'll look at them at the end, and then we'll respond to you to save time and make sure we don't take up too much of your precious time. If that doesn't work, that Q&A panel, then if you could just email Vicky with your questions on the email address that she sent you, the slides reply to that. So yeah, I think that's ready to sort of kick off. So I'll start off. I'm sure that I'm going to disappear now, so I'll do my final wave, and I'll start off the presentation. So back in July, 16th of July, Eileen Milner sent a letter out to accounting officers and copied it into the Chair of Trustees, a letter that covered a number of areas. And most of those areas we're going to be covering in more detail throughout the rest of this this presentation. But firstly, there was details about the COVID-19 support, including funding, which we'll do separately. She encouraged the use of the SRMAs that are in place to support schools with their financial and resourcing challenges that COVID-19 has thrown up. There's things called resilience visits that they're encouraging you to use, and that would include things like budget advice or your plans to mitigate the impact of lost income. They were, I don't know whether any of you have them, or if you do, they're going to be done virtually, and a short report will come out as a result of those to help you implement. So they are trying to offer you support to get you through this difficult time. So have a look at that if you can. They've issued, publications have been issued as normal, the Academy's financial handbook and Academy's accounts direction, and David and Michaela will cover those in more detail shortly. They're reminding you about the good practice guides that are available. They've had feedback that they are a helpful supplement to the Academy's financial handbook and accounts direction. And what we'll do, we'll send you a link after the presentation to where you can find those good practice guides. The ESFA activities, including the assurance visits, obviously what they tried to do was help you by with the unnecessary burden of those visits. So they were paused, but they have said by mid-autumn they expect to start up the financial management and governance reviews again and funding audits, but they will be undertaken remotely. So they are going to do a health and safety assessment, as you would expect of them, so that they can resume doing those on site, but as yet we don't know a date that will happen. So trying to get back to normal service for the ESFA. With regards to financial returns, there was a revised timetable that was issued on the 26th of August 2020, and we're going to go through those separately. So I've summarised everything and how it's been delayed, but there's some welcome breathing space for you there with some of the returns that you have to submit. They've also kindly given leeway on the naming and shaming so that when you don't get those returns in, to only those that were pre-COVID-19 outbreak. So that would have been the Land and Buildings Collection Tool back in November 19, the audited financial statements that were due on the 31st of December, and the accounts return that was due on the 20th of January at the start of this year. So if you failed to meet those deadlines, then you could, two of those, you could potentially be on the naughty step. Fraud risk management. There's a constant risk to the public funds from fraud. Michaela is going to cover that one off in more detail. Eileen Milner reminded you about the health and safety, the Good Estate Management for Schools, the GEMS, that was issued in 2018, April 2018. If you're not using that, she's encouraging you to look at it with an aim to update your health and safety, particularly at this time, is very important, obviously. And she also said that the Academy Sector's annual report for the 31st of March 2019 will be issued subsequent to a letter on the 16th of July 2020 that has now been they have now been published. I haven't looked through them, they're quite a hefty document. I intend to have a little scan through that, and probably will just update you in our monthly updates about any key matters that come out in my review of that. So moving on to the actual timetable, the revised timetable. The first one that is obviously quite critical at the moment is that the budget forecast 3-year return for 2020 is due by the end of this month. I'm sure most of you are quite a way through that. Obviously that did get delayed from July, which was quite welcome. The BFRO, the outturn for 2020, was completely scrapped. So again, that was quite helpful. The Land and Buildings Collection Tool that I mentioned earlier has been pushed out from 10th of November to December. The SRM SAT, School Resource Management Self-Assessment Tool, long-winded. Last year, I think it was the first year you had to do that by the 14th of November, which wasn't good timing because it came in the middle of our audit period. That's now been pushed out to the 15th of March. So there's a significant deferral on that one, which I think would be certainly welcome for a lot of you. The audited financial statements that usually have to be in by the end of the year, you've got a month's grace there. Eileen Milner is encouraging you, if you can, to try and get that done before Christmas. We'd obviously would prefer that as well, but understand that there could be some matters that affected your school that mean that you can't meet that deadline, so you've got some leeway there. Following on from the financial statements, the accounts return gets produced, so obviously by actually deferring the financial statements, that you would expect that they've deferred the accounts return requirement by a month to 23rd of February. They've reminded that the financial statements on the website, it's critical that they get on there. Previously the end of January, now it's the end of February. And then the last two there, you'll see they're returning to normal. So the BFRO for 2021 due in May 21, that's come back in. You didn't have to do it last year. That's now required by May, and the 3-year return will be back at July. So I think that's quite a useful summary for you to know what you've got to do. You probably already knew a lot of that, but I tried to collate all the information that's come in the ESFA bulletins into a helpful timetable there. So You still got to do the work, but maybe a bit later than than you would have done. So moving on to the Academy's accounts direction, I'll hand over to is it me?
No.
We seem to be having a bit of a glitch here, I think. Yeah. So I can hand over to Michaela. Apologies about that, but she's only in the other office, by the way. But it's we could say that she's in sunnier climes in Turkey or something like that, but she's not. She's in the other office. So over to you, Michaela.
Great, thank you, Richard. Good afternoon, everybody, and welcome. Just a quick reminder again, you can use the question and answers on the right-hand side if you wanted to put any to us. So I'm covering the Academy's accounts direction changes that Vicky sent you kindly the link to, which we do this sort of short summary in a fact sheet form. So hopefully that's useful in itself. But just to highlight a few points, it was published later than was originally planned and is applicable to this year's audit, your audits for the year ended August 20. Most of the changes affect the trustees report, and there are some changes which also affect large academy trusts. The definition of large is that you meet 2 out of the 3 following criteria, which is employees more than 250, your balance sheet gross asset total is more than 18 million, and your income is more than 36 million. So you have to have met 2 out of 3 of those to be large for the definition of what's required. But also there's a criteria there of using 40,000 kilowatt hours in the year, because this reporting that's required this year is all around carbon reporting. And there's a separate good practice guide where there's a link in the fact sheet that we sent you. So do have a look at that if that applies to you. So looking at the disclosure changes then, first of all, the trustees report. You are now required to put an example of how you engage with your employees in the trustees report, and some guidance on the wording on that is on page 90 of the accounts direction. Again, if you're large, you need to put how you engage with your suppliers, and that is on page 90 as well. And then another new area this year is about describing how you have measured success as an academy trust, and that needs to go under your objects and activities paragraph in the trustees report. The SFA this year are also expecting more commentary on going concern and have published a separate guide, a good practice guide on this. And again, refer to page 92 of the accounts direction and you'll be able to see that link. And then the Streamlined Energy and Carbon Reporting, or SECR for short, the link again to that fact sheet is on page 96. There is also effect on the governance statement, and that is because of the changes around internal scrutiny. You now need to state in that government statement how your arrangements have been affected by the new Financial Reporting Council's ethical guide, which meant that you cannot now have the same internal and external auditor. And then you also need to state if the trustees have reviewed and taken into account the governance handbook. And if the answer is no, then I think the SFA will be expecting you to have that on your to-do list for future. But I also appreciate that quite a few academies haven't got round to incorporating that into their board meetings. Then moving on to the statement of regularity in the accounts. It's always been good practice to put a figure on this if there is any material irregularity, but now it is a requirement to do so, and that is covered on page 104. So this is a requirement for the accounting officer to do so, but also those figures should then flow through into the auditor's report of that material irregularity. And then again, they have been given some more advice around when an accounting officer leaves, because they were ending up in a scenario where there was nobody to sign the accounting officer's statement. So they've put a little bit more guidance in there so that you aren't left with nobody to be able to sign the report. So turning to the notes of the accounts, the accounting policies now require you to be clearer about group mergers and what academies are included and not included in the accounts. And that's just good sort of transparency, really. A new requirement under the charitable activities note is that you now need to break down legal costs between costs incurred when you convert to be an academy trust, but also ongoing legal costs that you might be having. The funds note in a multi-academy trust now is required to split out per academy, disclosing the individual balances. And I think that goes around the whole debate of gag pooling and everything else, which I know we've touched upon it at previous forums. There is a requirement to have the changes in net debt note on the cash flow statement of the statutory accounts, and this is required more under the charity SORP than under the Academy's accounts direction, but we often see this when you have any Salix loans, therefore watch out for it at that point. And then there is, as there is every year, the pension note changes to do with the TPS and the local government pension scheme, and those changes are on page 136. So in the accounts direction, there is also a little note about preparing ready for your external audit, which we hope that helps. But also we know that Alan Davies here has sent out our guide to each of you as academy schools, so that hopefully you can tick down through that and be as prepared as you can be in these times. So after that was issued, the ESFA then went on to issue this supplementary bulletin, which was promised and has came out in July. And this was to more fully reflect any COVID events in your accounts. So under the regularity audit, as auditors, we have been asked to make sure we cover testing on income and expenditure around things like exceptional cost funding and furlough claims. And I know Richard is going to be covering exceptional cost funding later on in the agenda. But this will now also form a separate note in the accounts, note 4. So do have a look at that bulletin, because that will be an additional and new note in the accounts that you won't have seen before. They also have asked us to have a look at procurement policies, because there's been a change in the procurement policy note 0220, which was issued in June. But we appreciate that a lot of schools have had some trouble following their own procedures because people have been working from home, haven't had access to computer systems as normal, and therefore in some cases the value for money has also had to be overridden because you've needed expediency rather than the value for money. So we'll be guided to have a look around more on procurement. And then the final point is that the trustees report, the ESFA are recommending that there is some wording in your trustees report reporting back the impact that COVID has had on the school. And that may not well be financial, it is more about the time and effort that also other people have had to put in to get schools up and running. So, that's your soundboard for you to put your words down about how you feel, how it's gone. Right, that's it from me, so I'll hand over to David.
Good afternoon, everyone. I hope you can hear me okay. Yeah, I just wanted to run through the changes of the Academy's Financial Handbook 2020. This was issued in June this year and became effective from the 1st of September. A number of these matters really are more for trustees, members, and we will be communicating that through our updates, and we do some governor training as well. So just to run through them, the first point there on governance. 3 points to make. One is that trustees must now take ownership of the trust's sustainability and ability to operate as a going concern, and there's guidance on that. I mean, Michaela mentioned in the update on the Academy's accounts direction that there's more emphasis on going concern. Clearly, as we know, over time, more and more academies are getting closer to having cumulative deficits. The SFA are concerned about that. I want to make sure that early action is taken and that the people responsible at the top, the trustees, members, are fully aware of this. Second point is that members must not be employed by the trust, and that includes anyone that's doing unpaid voluntary work for the Academy. And the other point is that members must be kept informed about trust business. Now, again, this is one that we'll be making the point to the trustees when we meet with them. Members typically sit above the board and are not involved in the day-to-day activities. They tend to be akin to shareholders in commercial businesses. But now, obviously, ESFA are concerned they want the members to have more knowledge on a more regular basis. So we will be informing trustees on that. So that's the government point. With regards to the clerk to the board, basically this was a should last year, and there was guidance in the AFH 2019 about the role of the clerk. Basically, well, now this is a must, so all academies must now have a clerk. So if it's not in place, it should be. Now, what does a clerk do? Well, clerks' roles do vary, but it's again akin to the company secretary for a commercial limited company. They look after all the statutory changes, updating all the registers, etc. They're also responsible for making sure that all the board meetings are put in place, the minutes properly taken and issued afterwards. There is guidance in the AFH regarding clerking competencies and also a development programme that the SFA have issued. We are considering doing some training on this. We're going to be sending probably out looking for feedback afterwards to see what the interest is out there. We've had at least one request already. So again, if you could make sure that it's known internally that the clerk must be put in place. The clerk can't be a trustee or the principal or chief executive, but it's no reason why it couldn't be someone else who's a member of the staff. So moving on from the clerk, register of interests, it's now a must to keep this up to date. In our letters of comment each year, our audit findings report, we quite often make the points under regularity that these are not up to date. It's now a must, so be mindful of all the trustees having to provide details of their pecuniary interests, and these are actually on the register. Accounting officer and chief financial officer, there's no change in terms of, this is not now a must, but it's now, these should be employees. And I think the SFA, I think, would like to make that a must, but they can't because they recognise that in certain situations, interim accounting heads or chief financial officers are put in place, and that timeframes don't allow that, so they have to be self-employed. In these instances, it is a must that the SFA give prior approval to these appointments. Moving on to general controls and transparency. I'll run through these. I think a lot of these you will have in place, so no real change. But the fixed asset register, which originally was a best practice, that's now a must. There must be a fixed asset register in place. Pupil number projections, these should be reviewed each term. There's more encouragement to use the integrated curriculum and financial planning. I think obviously the uptake on this has been a lot slower than the SFA would have wanted, so they're again further encouraging it without making it compulsory. Bank accounts, obviously a number of academies will have more than one bank account. And what the ESFA are now saying is that all bank accounts must be kept in credit at all times. So you're not allowed to let one bank account go into overdraft, even if your overall bank balances are in credit. So be mindful of that. New one here regarding employees with benefits over £100,000. It's now a must that this information is published on the Academy's website. Now, what's been said here, there was a subsequent update from the SFA which said that this really starts from the extracts from the 2019-20 statutory accounts, which will be prepared soon, and this information should go on the website following the submission of these accounts. Now, originally the deadline for that was 31st December, meaning they wanted this information on the website no later than January 2021. I'm suggest now that, given they've pushed back the deadline for filing the accounts, submitting the accounts to January, that now this information must be on the website by February 2021. So we need to bear that in mind, and we'll make this point again when we talk at the audit clearance meetings later in the year. Alcohol, as is to be expected, they now clarify that this must not be purchased except where it's used in religious services. So that's that point. Whistleblowing, whistleblowing procedures must now be published on the website. The risk register, this must be reviewed by the board at least annually, and it must be minuted as being reviewed by the board. It's not acceptable for this to be delegated to the audit committee. It must be minuted that the board have reviewed it. The point on audit committees, you'll see there below I've got audit and risk committees. The audit committee has now been renamed in the handbook as the audit and risk committee. Says that audit committees must report to the board on controls around non-financial risks as well as financial risks. And I suppose things like health and safety, maybe disaster recovery, etc., IT possibly controls, need to be reported to the board, as well as the usual financials regarding the ones that we report regarding the financial system. Now, moving on to the final point, actually just to mention that obviously another big part of this year was the internal scrutiny and updates there, so there's a separate slide on that. Looking at the audit and risk committees, they further clarified the role of the audit and risk committee to include that they review the external auditor's plan each year. Well, we have sent out our audit plans already to the chair of the audit committee and also the head teacher, and we've probably copied you in on those as well. Review the annual report and accounts, review the auditor's findings and actions taken by Trust Act managers in response to those findings, assess the effectiveness and resources of the external auditor, provide the basis for decisions. So, and then produce an annual report on the committee's conclusions to advise the Board of Trustees on the reappointment or dismissal or retendering of the external auditor. So again, we'll be pointing this out to the trustees that the audit committee needs to report to the board each year on the performance of the external auditors. So that was a whistle-stop tour, other than the internal scrutiny, which I will return to. So I think it's still me on the agenda now, isn't it? So talk about pensions update. Yeah, the joy of really the LGPS pension. I suppose the first point there, the impact on the balance sheet position. Well, each year, the three key elements to this would be the asset returns, which is returns on what your assets are invested in, whether it's the stock market, whether it's property, etc. This has been very volatile over the last year, and indeed some academies, depending on their mix of assets, may experience deficits rather than returns on that this year. Corporate bond yields. This is used for the discount rate to work out net present value of future liabilities. Again, corporate bond yields have been low, so the expectation is that, well, we know that the actual discount rate used will probably fall to around 1.6, 1.7% on around 1.9% last year. What that means is that the net present value of liabilities is going to increase. Then expectations of inflation. Well, expectation of inflation perhaps might drop slightly from the previous year, which would have a positive effect on the liabilities. The upshot there is that, oh, one other thing I should mention, obviously this year's valuations will be taking into account the 2019 triennial valuation, which is the 3-year update from 2016. Some of those changes are expected to probably have adverse effects. So the upshot is there could be some quite significant increases in the deficits in the LGPS pension this year. Again, we've taken the decision in our accounts to actually disclose that separately on the face of the statement of financial activities to make the accounts clearer. But just so you're aware, there's probably going to be some significant increases this year in the pension deficit. The actual reporting from Aon, which look after Hampshire, they this year are going to do, oh, sorry, there's a typo there, it's full investment return information. Basically, they are waiting until they've got the full information on investment returns up to 31st of August. In the past, they've sometimes they estimated the last couple of months, which means that there's going to be a slight delay in the issuing reports this year. They promised these reports by 16th of October, so we'd be grateful as soon as you get them if you could forward them on to us if they don't come to us directly, and we will then immediately incorporate them into the accounts this year. McLeod liability, well, obviously this is something that came into being last year after the court decision regarding the basically unfair treatment of people who are lower than the pensionable age at a certain date, going back to I think the early 2000s. This will be updated for the 2019 funding valuation, which again is likely to have an impact on the increase in the McLeod valuation liability. Last year this was brought in as past service costs. Any movement this year will be brought in as a current year service cost charge, so that's the impact there. GMP equalisation and indexation, again this year, last year it was considered to be, I think in most instances, well, immaterial. This year there's going to be an inclusion for indexation for the guaranteed minimum pensions to come in, so there will be adjustment for that as well. I don't think there's any separate charge. In the part last year, you were given options about whether to go, in the case of McLeod, an accurate valuation estimate. I think this year everyone's been given that they've taken a consistent approach to everyone, that everyone will pay the same amount and get the same information on their schemes. So really, I think a lot of it obviously is actuarial. It's difficult to comprehend, but just so you know that you're going to see probably in a lot of instances significant increases in the LGPS liability this year. Where that impacts, I mean, the liability ultimately is a long-term liability underwritten by the government. The impact hits home on pension increases, and I think we're already aware of the contribution increases that will come through. So I think really that's what all to say on the pension update this year. Like I say, once the reports come through around the middle of October, if you could get them to us as soon as possible, then we'll update them into the accounts. Internal scrutiny changes. Well, as you're aware, in the 2019, basically the method process for internal scrutiny changed. There was a requirement that the work of the internal scrutineer was dictated by the audit committee rather than the internal scrutineer deciding what to do, and that the audit committees would use the risk register as a base. The big change this year, we've been expecting it for a while, and I mean we were aware that the Financial Reporting Council, which is the body which oversees the practices of accountants and auditors, issue the ethical standards each year, and basically auditors, external auditors, need to be and be seen to be independent and not influenced by other services, etc., and also review of their own work. And in turn, for a while there was a confusion over what is internal audit and what is internal scrutiny. We and others took the decision that the ESFA needed to clarify this, so we continued offering our services throughout the summer, which unfortunately in most cases were put aside due to the lockdown. But obviously from 1st of September, which has gone live now, you need to change. So we've communicated to all our academies that we have to stand down and you have to find an alternative. We have contacts with other firms, other internal audit specialists that we've passed on information to, and we're already aware of some changes. Some people have got alternative providers in place. If anyone's struggling, any of the academies out there are struggling to find alternatives, please let us know and we can actually probably help you find an alternative. So that's a key point there. That's ongoing. I mean, typically in this coming this term, we haven't in the past done internal audits, though this has been covered by the external audit up to Christmas, and we've done two, one in the spring and one in the summer terms. So whilst it's probably not crucial at this time to have found the alternative, it's something that you need to be working towards. So please let us know if you're having any difficulties in that respect. One other thing to mention, it's not on the slide there, but obviously this year we need to be you need to submit with the annual accounts and the audit findings report, the annual summary report for internal audit. Now, again, because of COVID-19, those reports will be missing some internal audit visits. There are other areas you can include. You can include work that's been done by trustees on a special project, for example, looking at a certain area. Again, they don't have to be financial based. You can use things like health and safety, disaster recovery, etc., and put those things in. We will certainly be helping you with the annual summary report and giving you sort of a pro forma template to use, and certainly helping you with that. I think the ESFA will understand this year that due to the lockdown, social distancing, that lots of academies around the country will have had probably no reports done from probably late March. So I think there'll be a bit of understanding this year that if the content of the reports are perhaps lower than usual, but we'll certainly be giving you help with that as part of the audit finalisation procedures. And the other thing I alluded to it there, but on the slide about specialist non-financial internal audit work, again, we should be looking at some of these things that have happened to make sure that they actually get into the annual report. So I think that really covers, and obviously the problem that is out of our control really and is giving you difficulties is actually finding replacements. But again, let us know if you have having any issues with finding anyone else. So I hope I haven't gone too quickly on those three. By all means, ask questions or follow up with emails, anything you've got. So we'll move on to the next slide, Vicky.
Okay, back to me. Heavy going some of this stuff, I know, especially pensions. That hopefully you're still with us and not nodded off too long. No offence, Dave, but sometimes that can be a bit hard to take. I think, unfortunately, as Dave is saying there, a lot of people talk to us at the end about this blessed liability in the accounts, and it's going to be a bigger figure in brackets, unfortunately. Moving on to the additional grant funding that I mentioned at the start of the presentation. On the 19th of June, Gavin Williamson announced a £1 billion package on top of the 14 billion three-year funding settlement they announced the year before, to help returning education to normal routines as quickly as possible, as they saw it as, or the government sees it as, critical to the national recovery. So within that breakdown of that billion was 650 million related to a catch-up premium and 350 million related to a national tutoring programme. So I'll just explain a bit more about both of those. The 650 million is to tackle the impact of lost teaching time as a result of the pandemic, and it's going to be shared across state primary and secondary and special schools in the 2020-21 academic year. Now this grant is regardless of income or background, so it's spread across a wider number of pupils. Mainstream schools can get £80 per pupil for year R to year 11. Special and hospital schools, etc., get £240 a place. That recognises the significantly higher costs per pupil that those schools face. So how is it going to be paid? Well, between autumn and 20 and early 21, there's going to be a payment made that will total £46.67 for state primary secondary schools, and for the special schools £140 per place. And then the balance of it will be paid in the summer term in next year, the £33.33 and the £100. Now, there's flexibility to spend it in the best way, and head teachers will decide how to do that. Now, that might be difficult to do, but in order to help head teachers as to the best use of that funding, the Education Endowment Foundation, the EEF, have produced a support guide, and we'll send you a link to that, of the evidence-based approaches to help students catch up. So, e.g., things such as the small group or one-to-one tuition, summer programs that you may have put on already to help re-engage pupils, and some of it could be used for extra teaching capacity that you may have had to take on as you've started this new term. Now, obviously, as with any government funding, there's going to be accountability and monitoring of how school leaders have used this funding. So it's got to be proved that how it's managed to achieve the goal of getting schools back on track and teaching a normal curriculum as quickly as possible. They're also suggesting that governors and trustees need to scrutinise the plans to consider whether the spending's in line with the catch-up priorities, and ensure that there's appropriate transparency for parents. Now, that transparency, up to you, but it may include publishing something on the website. I don't think there's anything that says you have to do that, but obviously practically, how are you going to be transparent to parents how you spent that funding? A lot of parents will be interested in this because they will feel that some of their children may have been affected by not going to school for some time. So I think that this could be under scrutiny from a lot of parents. So that transparency is going to be important. Another part of the monitoring, as you would expect, is going to be revolve around Ofsted. So they are going to conduct a programme of non-graded visits during autumn. It will involve sort of discussion with the heads, and it may include a review of the plans of how to spend the catch-up premium funding that you've been given. The Ofsted have got plans for their routine inspections to restart in January next year, but the exact timing of that is being kept under review, and obviously with changes that are happening regularly, that may be pushed back. But they will make judgments at that time about the quality of education being provided and how school leaders are using their funding to ensure that it's having a positive impact on all pupils. So that's the catch-up premium. The National Tutoring Programme, this is the 350 million of the 1 billion. This is designed to increase access to tuition for the most disadvantaged and vulnerable young people, as that the ESFA see it is likely that they will be the hardest hit by this disruption to their education that COVID-19 has had. So it's designed to reach up to 2 million of England's most disadvantaged pupils. It's split between a number of 3 programmes. The Reception Year Early Language Programme. This is to make training and available at no cost to the school, and it's targeted to support those with oral language difficulties, and it would improve that for them. The 5 to 16 programme, 5 to 16 programme, I'll cover that below in a minute. The 16th to 19th providers programme, guidance on that is issued shortly. I couldn't find anything on that. If any of you have managed to obtain that, I'd be grateful if you just let me know where you've managed to do that. If we do find that, I'll issue some further guidance after that. The 5 to 16 programme is split between two. It's to do with tuition partners from November 2020. Schools in all regions will have access to subsidised tutors from an improved list of tuition partners, and the ESFA will be working with the EEF to deliver this part of the programme, and I'll send you a link to how they're doing that. The academic mentors is again for schools in the most disadvantaged areas, and it's starting from the 2020 half term, and the remainder will be in spring 2021, and it's being done in conjunction. Teach First will be supporting the recruitment and training of mentors, and their salaries will be subsidised by government. So those tutors will be able to be used by you to provide small group tuition to your pupils to obviously help those disadvantaged children. So another one that you may have already been involved in this because it had to be, one of the deadlines was to get it done by the 21st of July 2020. So you probably know quite a lot about this if you made a claim. It relates to exceptional costs that have associated with the COVID-19 pandemic for the period from March to July. So all those costs will have been incurred by now, so you will know those. It can only be claimed for those costs that relate to specific items, and it's only where you're unable to meet it from your existing resources, or you could only meet it by drawing down on your past reserves. You're not eligible to claim it if in this year ended 31st of August 20, you will likely make a surplus, and that you've got historic surpluses, therefore your accumulated surpluses by the end of August have increased, so you're not eligible to make it if you've had that surplus increase. So the specific items that you can claim are increased premises related costs. This is utilities and resources to keep the school open during the Easter and or summer half terms, and it's for the vulnerable children and children where they're of critical workers who have faced extremely difficult circumstances. There's also the second thing is support for free school meals for eligible children not attending school, where those costs were not covered by the National Voucher Scheme for the Easter and summer half-term holidays. Additional cleaning, and that's only cleaning over and above costs of the existing cleaning arrangements. And one of the things that it doesn't cover is the loss of self-generated income. And I know that a lot of you, this would be where it would have been better if it could actually replace that lost income, but unfortunately you can't claim that. And that's what you've had to deal with in reduced level of funding. If you are able to claim, there's a claims limit depending on the pupil numbers. If there's less than 250 pupils, it's 25,000. Between 251 and 500 pupils, 30 grand. 501 to 1,000, £50,000, and anything over, any pupil numbers over 1,000, a maximum of £75,000. Now for special schools, it's up to £50,000. Obviously, you'll need to provide the related assurance that only legitimate additional costs due to COVID-19 have been claimed, so therefore you'll need to keep records in case there is some inquiry into your claim. And I think, as Michaela mentioned, with the Academy's Accounts Direction Supplementary Bulletin, details of the income and related expenditure is going to be required to put in your account. So make sure you keep the appropriate records if you have made a claim. As with any other grant, the SFA have a right to look into that and audit it and claw it back if you made an inappropriate claim. As I said at the start, the claim needed to be made by the 21st of July. However, and you should have, those that did make a claim should have either got the money now or be getting it very shortly, because academies were due to be paid it at the beginning of September. Don't fret if you haven't made that claim. There is a subsequent claim window in autumn, and further details of that will be published later. That's a whistle-stop tour, as Dave said, through the additional grants. I expect you've been looking at those anyway, but obviously if you've got any questions about that, please send them to us, and we'll either direct you to the related links or answer your questions that you may have. So now back over to Michaela to talk about the fraud risk during this time.
Thank you, Richard. So back in April, the ESFA issued one of their updates, 22nd of April, entitled Increased Fraud Risk During Coronavirus. And this is because it's proven that in periods of instability, like the pandemic, there is an increased risk. Many of you may have been operating from home, and processes and procedures may have slipped a little. Some of your team may have been absent, and like you, we have seen the phishing emails come in, and we have seen change of bank detail frauds during this period. And that's all very unfortunate, but these things have happened, and we've got to sort of deal with them. The fraudsters, take this opportunity and try and exploit you. And in some circumstances, people that you've known for many years may now be under financial pressure or stress, and they then do things that they wouldn't have done before. And again, unfortunately, we've seen this. One example I can think of is somebody who has taken funds to feed a gambling habit that they have. So do have a look at that ESFA update. This was then backed up with the accounting officer letter of the 16th of July. And in there's a paragraph headed up fraud risk management. And it's just highlighting again that, obviously you are custodians of public funds and they need to be protected, and that cybercrime really is the main significant issue. And of course, it's becoming more and more complex. So we can send you later on, there's an Academy Trust guide to reducing fraud. We can send you a link to that, and it might be a good time to revisit this document and see how you score, and if there are any areas of weakness that you could sort of tighten up a little bit. Things like updating your firewall and reminding staff not to open those emails with those sort of Trojan horses attached to them. So Vicky will send that link at the end of this webinar. There is also a guide, Cybercrime and Cybersecurity, a guide for education providers, which was updated on the 12th of August. Again, worth a look. Lots of good checklists in there. I don't want to go through the specifics of it, but there's sort of like a 10 point checklist that you can go down and through and see if any of those ring any bells with you. It's also about making sure that if you do have a fraud, that you report it correctly, and that gives you all the good links to where you are meant to report if you're in that unfortunate situation. And then the final link that we'll send through to you is indicators of potential fraud, and this is more generic, but again is worthwhile looking at because we know this is an area that is under attack at the moment, and it's always good to have that reassurance rather than looking back and wishing that you'd looked at it at the time. So that was a very quick whistle-stop tour through that, but rest assured, we are seeing these problems in our client base, so you do be aware of them yourselves. I'll hand back to Richard.
Well, hopefully you've managed to hear us all the way through. This linking up is going all right at the moment from our end, so I'm smiling because we're nearly there, you'll be pleased to hear. A couple of very smallish points is that Sport England grants, for those of you that have had those historically, typically a grant condition would have been that you set aside some of your reserves to make sure that when the asset that you bought for sport purposes needs replacing or repairing, there's a fund set aside for it. So just be mindful of that. If you know that you've got a Sport England grant, your reserves, particularly your notes to your accounts, need to sort of ring fence a certain amount of money each year, needs to be transferred in the accounts from the unrestricted or restricted reserves into a separate specific fund. That means the money is there when that needs replacing. Usually it's things like a mugger or some artificial surfaced facility that you've got at the school. So for those of you who've got Sport England grants or know you have, and maybe are new to your school as a business manager, just maybe dig that out and make sure that you're complying with those grant conditions. The other thing to flag up is also something that Dave mentioned in his, that the ESFA have been very keen on, but maybe hasn't had as much take up as they would like, which is the integrated curriculum financial planning tool. And that they believe that this can promote joined up leadership in your school and support the decision making. They have pushed it very hard in the past. This is another attempt, I think, that between November 2019 and March this year, the ISBRL ran a series of training events, and the DFE funded that. And one of those was recorded, and it's you can review it free of charge. It's only 30 minutes. So if you haven't taken or are interested in finding out more about that and don't know about ICFP, then maybe we will send you the link to that webinar that you can watch. I've watched it. It's fairly easy watching. So yeah, maybe again we'll send you that link. There'll be a number of links, and obviously you can pick the ones out that you like. So finally, and last but not least, we thought that we have, as most of you will know, we've got a fantastic VAT specialist in Alan Rolfe, who has designed our website specifically for academy schools. It is a subscription-based service and only can be accessed by those that pay the subscription. It's got a hell of a lot of content on there, so we just thought we'd remind you and any new business managers that aren't aware of it, that what it offers. And he's hopefully, if IT goes as well as it has done so far, he's now going to take over and show it to you on the screen. So no pressure, Alan, over to you.
Thank you, Richard. I hope you can hear me. So what I'd like to do is just quickly show you a quick look at the Academy VAT website and just run through a few of the things that we've got on there. VAT is, as you are aware, quite a difficult subject for academies. So we've put together the website with a resource for you all to sort of use. So if I just quickly run through the sort of things that we've got there. On the overview, we've got a background to VAT as it relates to academies. And that sort of gives the introduction about what VAT applies to. We cover various things here. We look at the charity status, we're looking at sixth forms, there's the legislation up there, and all of these sort of details are useful for that sort of background to how VAT fits together. So I think that will give a good overview of many of the points to look at. Now, one particular point that is relevant is looking at the business or non-business structure for academies, because that's really the key part for VAT as to which types of expense can be recovered and which things are subject to VAT or parts that you just can't recover the VAT on. So this distinction between business and non-business VAT is described in some detail on here. We've got details about apportionment, what's closely related to education, and some background to it. And you'll see throughout this site that we've got links that cross-reference things like the revenues guidance, the revenues internal manuals, and also commentary about relevant cases and that types of thing. This all leads, once we've sort of looked at the business or non-business matter, it leads on to then thinking about very specific types of income and expenditure, and that's really the key part of this website. It's all covered under this separate section with the VAT treatment that applies to lots of different types of activities that might go on within the academy setting. I'll just pull up a couple of these just to show you the sort of information we've got. Each of them will give a general background to the topic. Then there's a box which explains about the VAT treatment of that activity. So here I've got the fundraising page up. It shows that any income received would be exempt from VAT if you're VAT registered. Well, obviously, if you're not VAT registered, there's no VAT to consider on the income. And for fundraising, the expenditure can't be VAT incurred on expenditure for that can't be reclaimed, a consequence of it being an exempt supply as far as the income is concerned. We then give a breakdown of the relevant factors about operating through a subsidiary or a PTA, anything else that might be relevant there. Cross references to other sections, so fundraising is often linked with advertising and gifts and entertainment, so there are cross references to that. And then we've also got the technical background as with more detail, links through to the revenue guides, that sort of thing. So it's quite a sort of useful and practical way to look up things. If you're unsure, we just go through, look at various topics in some detail. Obviously, there may sometimes be a case where you look at one of these things and either it's not clear or you've got something that's slightly out of the ordinary. And of course, we can also help with that. You know, if it's not covered on here, we'll pick up that point and help you understand it. Because obviously sometimes we can't sort of give every detail on the website. So if it's something that you think should be there and isn't covered, we're quite happy to just pick that up and give you some full details about that. Sometimes the topics are a little bit more involved. Something as simple as lockers, I've pulled up the page here. You'll see actually on this area, we can end up with the income and related expenditure falling under a number of different treatments. It could be a hire, it could be a deposit, it could be a compensation payment. And the VAT treatment for each of those is slightly different. So we've broken it out and given that split. So I think what we've tried to do is make it as quick and easy for you to look things up. So, you know, if you've received some money in for hire of lockers, you go, well, should we be accounting for that? Look at the table. Ah, yes, it's a standard rated supply. Therefore, we need to account for some VAT to the revenue. So it's a resource that, you know, everybody within the finance function can look at. And I hope it would give you reassurance that you're doing the right thing, but also it will give some peace of mind that should the revenue come and look at your affairs, that you can show that you've been careful and that you know, you've taken due care with the way that you've handled the VAT position for the academy. So I think it's just a useful sort of resource that's available there, and I think something that perhaps, you know, everybody can get some benefit from. So I think it's just useful reminder. So I think that's really all I wanted to say. Just a quick whiz through and show you what was there. So perhaps back to Richard to pick up the any further questions and that side of things. So thank you very much.
Thank you, Alan. As I said at the start, if that is of interest to you, particularly for maybe reference material for some of your team that ask questions about VAT, we think that's quite a very good value for money resource to have there, that can stop the need to be seeking sort of paid advice, because they can go and see it themselves. Yeah, so hopefully you've seen that is we think a fantastic specialised VAT website and resource for you. So hopefully we'll be flooded with emails wanting to sign up to it. Yeah, we're nearing the end, which should be good for you, and it's nearing an early finish, which is good. Just to remind you that we're putting on David and Michaela are putting on a trustee training event that they usually do. This is an update that we run every year to remind trustees, or to actually update trustees on developments that have happened, things like the new Academy's financial handbook and the Academy's accounts direction that we covered today. This is specifically for trustees, so any of your trustees that would be interested in that, please let us know. We've got people signed up. It's going to be once again a virtual event. So now that we've run this one, we'll be experts in it. Obviously, we do hope to return to face-to-face at some point in the future, and we're hoping that our next forum on the 14th of December is that. We understand, as I said, that it's there's also use in talking to one another, and unfortunately we haven't had that opportunity today. We also haven't had the opportunity to have sandwiches, to be able to give you a few sandwiches to say thank you for attending. So when you're eating your sandwiches at lunchtime, think of us, and think of what you're missing with the cakes. I know that Ian and Anne usually make sure they request those. So sorry, Ian and Anne, we haven't been able to fulfill our duties on that side of things. As we said, the questions and answers, we've seen that a couple have come in, and I think Michaela has been very efficient on answering one of those, but we will make sure that we follow up all those questions, and we'll be sending the links to you. Vicky will be sending the links, and yeah, so we hope it was of benefit. Sorry that it got delayed. We were due to have one in July, and obviously because of restrictions on getting together and venues, we obviously had the cancellation with the venue at Eastleigh Football Club, but we know that that's an alternative in future. And we've just put there our email addresses for those of you that aren't HWB clients, or save you looking it up. That's a contact for any of us. Please email any of us, and we'll make sure we reply to you if it's something that Michaela or David spoke about, or Alan even. Then we'll obviously direct it or Vicky will direct it to the right person. So that just leaves me to say, make sure you stay safe and well, and we look forward hopefully to seeing one another again on the 14th of December. So believe me, I'm waving again as a knee-jerk reaction to, as I always do, to a webinar. So yeah, see you soon. Bye.